The word write-off for some reason has this perception of a personal expense, but that's the misnomer. This write-off phrase gets thrown out there and people think that they can go buy a boat and write it off. You can't do that unless your business is driving that boat around for people. That's not a write-off.
Hey everyone, welcome back to CSI. I'm Jordan, and today we're tackling a term that gets thrown around all the time: tax write-off. You've probably heard people say, oh, it's fine, it's a write-off, but what does that actually mean? Well, a lot of people really don't actually know, so that's why I brought in Tyler Johnson, an account manager at CSI and an absolute wizard when it comes to taxes. He's gonna break it all down in super simple terms so that by the end of this video, you'll be able to say with confidence that you know what a tax write-off is. Let's dive in. Hey Tyler, how you doing today?
What's up, Jordan? Doing all right.
So let's start simple and explain to us what a tax write-off is in plain English, and why is it so important for business owners or just regular people doing their taxes?
Okay, so a tax write-off in plain English. I'm going to do this a little bit differently, I think, this time. But let's take this pen, for example. Okay, I'm gonna sell you this pen for $100. Okay, so you get the pen for $100, right? So I now have to pay tax on this $100 that I'm holding right here. I have to pay tax on this. That's a bummer. How do I lower my tax? Well, I have expenses that I have in my business. You mean there's expenses related to making this pen and selling it? Yes. So I had to go to the store, for example, and buy blue paint to paint this pen that I just sold you for $100. That blue paint I just bought, that's a write-off. And that write-off goes against the $100 that I just collected in income, thus lowering my taxable income that I have to pay tax on. So I got the $100, but my cost to paint this blue lowers the $100 in tax that I have to pay. Let's say it's $10. So it cost me $10 to paint this. I now have $90 that I have to pay tax on the bottom line. That $10 I spent on the blue paint, that's a write-off. In plain English, that's about the best I can do.
Gotcha. No, I think that's great, and thanks for the fun analogy there. But just to reiterate, it's essentially expenses on your business from your business income that is directly subtracted from your taxable income. So you can see how these expenses over the course of a year can add up, or say you make a really big purchase, and how that can affect the amount that you owe in taxes.
Oh yeah, absolutely, Jordan. Yeah, there's tons of expenses. This is just one of many examples, but yeah, it helps you lower that profit that you have to pay tax on. Now you still want profit at the end of the day because that's what helps sustain your business, but there's a lot of different expenses that come in here. I just highlighted one being the blue paint. There's some gold accents. There's a whole cap. There's ink. There's a lot of other expenses which would be write-offs to thus lower my taxable income.
Cool. So can you tell us what kinds of things are eligible for a tax write-off? Like, can I just say my new gaming console is a write-off because I use it for work?
Yeah, I'm glad you asked that question. That comes up a lot because I think there's this misconception that anything is a write-off or everything is a write-off, and it's not. A good example is a credit card payment. A credit card payment is not a write-off. The write-off is really the credit card charge that you went and bought, say, a laptop that you needed for your business. It has to be a business expense, though. It can't be a personal expense. And I think that's where some of the confusion comes on when people hear the term write-off. They think that it's some personal write-off that they can get benefit from, and it's not. Let's be clear here. It's a business expense, and it has to be on business supplies or business direct expenses. Nothing personal can be included in this conversation. So I want to make that clear.
Here's something I hear a lot. People think a write-off means you get money back. Like if I spend $1,000 on some kind of business expense, I get $1,000 back from the government. Is that true?
It is not. No, this is another great point, Jordan. I think a lot of people think about this also. I get it a lot with charities. People are like, well, I'd rather give my money to a charity and see the full benefit for them and get the tax write-off on my side of things. And it's not dollar for dollar. Your write-off is never going to be dollar for tax purposes. So let's say you spend $1,000 on an expense. You don't get $1,000 off of your tax bill. You get, as a general rule, anywhere between 20 and 30%. Call it 25%. So you get a quarter of that $1,000. $250 is what you actually realize in real money for tax purposes. Does that make sense?
Yeah. Could you explain one scenario that I see a lot is when a company might want to have a lot of expenses right before the end of the year? So say they'll maybe even say to all of their staff, hey guys, if you need anything, make sure you order it by the end of the year so they can write it off as taxes. Like, what, can you just explain why that is the case?
Yeah, no, another great point. So that's what I'm doing right now. We're in December of 2024, and I am fully advising my clients that have profit. Key there is have profit. We're trying to minimize or lower that profit that they're going to pay tax on. So it's spend money now. If they have real direct expenses that they can pay now, they get full benefit for it for tax purposes. So sometimes I get the question, though, it's like, well, what about my loan? I have a loan on my vehicle. Can I pay that off? I have some extra funds. I really want to pay that off. No, that's not really what I'm talking about at the end of the year, because that's not a realized direct expense. That's some sort of loan and liability. It goes on the balance sheet. You don't get full benefit for that like you would if you were to give your employee a bonus or give yourself as the owner a bonus. It has to be a direct expense.
Could you tell us what you think is the biggest thing that people get wrong about tax write-offs that just drives you nuts?
Yes. I kind of alluded to it earlier, but it's this ideology that they can write off everything personally. They get this, the word write-off for some reason has this perception of a personal expense. I can write off my home mortgage. I can write off my home property taxes. Well, if they're not in the business at all, legally you can't write those things off. But that's the misnomer. This write-off phrase gets thrown out there and people think that they can go buy a boat and write it off. You can't do that unless your business is driving that boat around for people. That's not a write-off. So there's this misconception sometimes with the word write-off. I prefer expense because that gives a little bit more gravity to things, in my opinion. But
I'm just curious, what about like really big companies who are maybe using this as a strategy to maybe exploit some tax loopholes? Or, I mean, is that even really a thing? I think that's what people perceive when they hear tax write-offs in context of like really big companies. But yeah, I mean, are these like, are there loopholes within tax write-offs that are exploitable or?
I don't like the word loophole in general, and I try not to use it. Yes, there are certain tax strategies to use. I would say bigger corporations can utilize tax strategies. Loopholes, are there some? Yes, probably your biggest bang for your buck there is going to be any sort of retirement planning that you can offer to either yourself as the owner or employees. But on a big scale, there's a lot of fraud that happens with these write-offs, being a corporation buying some mega yacht and thinking that it's a direct expense to the business so that they can lower their taxable profit. That's not okay. That's very much against the rules. Are big corporations doing it? Yeah. Are they getting away with it? Sometimes, but we kind of have to hold some people accountable, and the IRS will eventually find out. So it's best to kind of cross your T's and dot your I's now and not have to worry about it later.
That's great, Tyler. Well, that was a lot of really valuable information, especially at the end of the year here. Is there anything else that you want people to know about tax write-offs? Any tips that you might have?
Ooh, I like that one. Yeah. If you have profit in your business, if your bottom line, so we have income and then expenses, and if you still have a positive number down here before the end of the year, and if you have money in your bank, go spend it, but spend it on direct expenses. Treat yourself to a meal if it's a business meal. Give yourself a small bonus. Do some things to try to minimize that tax burden on the profitable side of things. If you have a loss, disregard that entire statement. But if you have profit, try to spend down.
And there you have it, tax write-offs explained. Huge thanks to Tyler for breaking that down in such a simple way. If you found this helpful, make sure to subscribe for more no-nonsense business and finance tips. Got more questions about taxes or accounting? Drop them in the comments and maybe we'll have Tyler back for part 2. Until next time.